For the latest on the Eurozone crisis, we are now joined by Jan Lembret. He was Global Head for Financial Markets Research at Rabo Bank. He joins us on the show from London. Now, Jan, to begin with, yesterday we had Lucas Papademos say that Greece is already halfway towards a recovery. Enda Kenny has also said that Ireland is looking to the future with confidence. There is this view that seems to have emerged that after the ECB flooded the financial system with cash, the sovereign debt crisis has ended. Would you say that view is a little misplaced?
Well, I think it is a view that is too optimistic. Essentially, the LTROs, that liquidity provisioning of the ECB, which has been very generous, has prevented a collapse of the banking system in Europe. And that is a positive, but it hasn't solved the crisis, because the crisis is all about the fact you can't have a monetary union without a sufficient degree of fiscal and political union. And those building blocks aren't all in place yet, and up until that point, the LTROs are a liquidity solution, liquidity plaster for what's essentially a systemic problem.
Now, Jan, how easy or maybe how difficult do you believe it is going to be for regulators and policymakers to balance austerity with a program for growth in Europe?
Well, I think austerity and a program for growth are not mutually exclusive here. You can have austerity measures, you can have a good hard look at your spending. At the same time, just doing austerity measures by themselves drive your economy into the ground. In the worst case, in the best case, it doesn't matter. It's all really about building a better Europe in terms of the building blocks. One of those building blocks should be pro-growth reforms. And again, I don't think pro-growth reforms have much to do with austerity as in of themselves. They just have to do about sound economic policies and about confronting vested interests.
Now, Jan, US Treasury Secretary Tim Geithner has warned that severe austerity measures in Europe to meet fiscal consolidation targets, and I quote him, he says, would risk a self-reinforcing negative spiral of growth-killing austerity. Now, isn't that simply indicative of economic growth in most Euro economies continuing to scrape along the bottom for many years to come?
No, if Europe's only medicine for the crisis is higher taxes and lower spending, as in austerity measures as of by themselves without pro-growth reforms and the long-term perspective being improved, then indeed it will prove self-defeating. And unfortunately, in the case of Europe, it has been leaning more towards that tax-raising and spending-cutting variant than the pro-growth reforms.